Here's your monthly roundup of the major events that happen in the Kenyan markets, the Sub-Saharan and the global markets in the month of August. So to begin with, in the Kenyan markets, we had 5 major themes, them being 1, the IFB bond oversubscription; 2, we had the equity market; 3, we had inflation; 4, we had the rate cut by the CBK; and 5, we had the credit upgrade by the S&P Global. So on to the first one, with regards to the IFB bond oversubscription, we noted strong appetite by investors, where the government listed 2 IFB bonds in need of 90 billion, and investors placed in their bids at over 300 billion, noting an over 300% subscription to those particular bonds. This was also followed by a tap sale to those bonds of around 50 billion, which was fully subscribed by investors. And we continue to note that being of interest because of the tax-free nature of these particular bonds. On to the second theme, which is with regards to the equity markets. We noted a strong uptick in the Nairobi All-Share Index, where on a month-on-month basis noted a 10% increase, and on a year-to-date percent noted a 41% increase. This was largely driven by strong performance on multiple counters. August was also an earnings month where we had multiple banks release their results, quite positive in as much as the non-funded income line was quite low due to a low interest environment. On to the third theme, we had inflation coming in at 4.5%, which was largely influenced by an increase in non-core inflation, influenced by an increase in energy prices. The fourth major theme in the Kenyan markets was the rate cut by the CBK. We noted a 25 basis point decrease from 9.75 to 9.5% in a bid to lower borrowing costs, and we have expectations that for the next MPC meeting, a further rate cut should be underway. On to the fifth theme, in the month of August, we had Kenya's credit upgrade by the S&P Global, where Kenya was upgraded from B negative to B, citing a stable outlook. This led to a dropping in Eurobond yields across the market, and we continue to expect strong performance in that particular segment. In the Sub-Saharan markets, we noted strong performance in the Moroccan market, where the Moroccan All-Share Index was up by 35% on a year-to-date basis. This was largely driven by industrials and infrastructure securities, and we also continue to note upward performance in multiple markets such as Ghana, Nigeria, and South Africa. On to the second theme, in the Sub-Saharan markets, we noted Lesotho having a 25% basis point decrease to 6.75%, joining the likes of Kenya, South Africa, Mozambique, and Morocco, which noted 25 basis points decreases in their rate cuts as well. On to the third theme that we noted in the month of August in the Sub-Saharan markets with regards to the Zambian markets, where we continue to note strong performance and strong economic growth prospects due to strong and robust copper production, also followed by improved rainfall and improved agricultural output.
Fed Chair Jerome Powell hinted at rate cuts coming this September. It's almost guaranteed. Markets are pricing in close to 80% chance of this happening. But with disappointing jobs data coming out and still strong economic growth coming from the United States, this is almost virtually guaranteed. This is important because the Fed rate is the single most important lever of global financial markets, because most asset prices react to movements in the Fed rate. When Fed rates are lowered, stocks usually tend to do well, real estate tends to do well, and rate-sensitive sectors offer different opportunities for investors to capitalize. So this is one thing to watch. The month of August was really good for equity markets across the globe. Major stock equity indices rallied during the month, with the poster child being Japan's Nikkei that crossed the 43,000 mark during the month. This has been driven largely by wage-driven consumption in Japan. In the United States, it was earnings season, and it was really good to see that 78% of S&P 500 companies beat earnings estimates. And also, there's been breadth beyond tech, a lot of sector rotation away from tech into banks, industrials, and consumer discretionary stocks, which has gone to change the equity narrative that the rally that's going on is just not really tech-driven, but driven by other sectors as well. The MVP asset of 2025, which is gold, has continued performing really well, setting record highs in August, closing around 3,500 levels. This is due to the expectations of rate cuts coming in the next month, as well as continued geopolitical tensions. In the space of digital assets, Ethereum and altcoins have also been performing really well due to continued institutional flows as well as upgrades to these assets. This is exciting as it shows the evolving role of digital assets in different investor portfolios. However, the poster boy of digital assets, Bitcoin, had a down month with a lot of downward price reductions. This has mainly been due to profit taking as Bitcoin had hit record highs in months prior, and also capital rotations into different digital assets and other outcomes.
We continue to monitor this market into the last part of the year, looking for potential securities that we can add onto our portfolio.
For now, cautious optimism rules. This rally has shown it has legs, but we need to check if it really has the shoes.
All in all, in these two markets, that being the Kenyan market and the Sub-Saharan market, we noted strong performance in these particular markets, and we continue to assess the viability of these opportunities present in these particular segments, and we look forward to a strong and robust performance towards the end of the year.
And this has been the Global Markets Wrap for August 2025.